All right, let's take a look at your Chapter 8 homework. This is problem number 1. Again, identifying some new accounts, account types, and also the normal balance. So first one, we've seen this one before. We know accounts receivable is an asset. It's got a debit balance. Freight in is a new one. It's going to be an expense account, so it's going to have a debit balance. Purchases is a new account. Eventually, you'll get into what that's going to be inventory, but for now, we're going to call that an expense account. That's going to account for our merchandise purchases. So it's got a debit balance. Our purchase returns and allowances is going to be kind of like a contra expense where we return merchandise. So that's going to have a credit balance. Purchase discounts, same thing, contra. That's going to have a credit balance. And then finally, you've seen credit card expense already. That's going to have a debit balance as an expense account. All right. That is number 1. Let's check out number 2. We'll do some basic journal transactions for purchases. Purchases, again, is the new account we use for merchandise purchases. So let's check out number 1. We've got merchandise on account, terms in 30. So you debit purchases, credit accounts payable. And by the way, I don't believe they deal with any sort of sales tax in this chapter. So not that there wouldn't be, but just in case you're wondering, you only have the sales tax to worry about in Chapter 7. Okay, June 15th said you had purchases for cash. So same thing, you debit purchases except your credit cash, not accounts payable. Finally, you paid what you owed from the 4th. So debit AP, credit cash. All right, let's check out the next one. That's 2. Let's check out number 3. We're going to deal with some purchase returns on this one. So first one, purchase merchandise for cash, debit purchases, credit cash. On the second one here is going to be a cash refund. So we debit cash, and that return goes to the purchase returns account, and that's for 318. On the 4th, we bought merchandise on credit. Terms are in 30, and this one that we had freight, we had to account for. So notice the purchases goes to 875. The freight in is 25. Add those together. Total accounts payable is 900. On the 7th, says we had some return of some damaged merchandise, and it was a credit return. So you simply debit AP for 50 and credit your purchase return. So notice the difference between the 7th and the 2nd. It's just that this was a cash return and this one was a credit return. Finally, we paid part of what we owed for 850. Debit AP, credit cash 850 on this one. All righty. All right, that's number 3. Let's check out number 4. And on this one, we're going to have purchase discounts. Just like you had sales discounts, you have purchase discounts. It looks like most of the problems here are going to have the 110 scenario, where if they pay within 10 days, they get 1%, or we get 1% off. So start first one, we got a purchase, and for 2,000, we got freight. And so notice you debit purchases, you debit freight in, and then the credit goes to accounts payable. On the 9th, looks like we paid what we owed, less the 1% discount. So note that we've got the cash amount is going to be 2080. We paid the 2100, and the discount is taken off of the 2000. So be careful on this one that you don't take the discount off of the freight. So essentially, what they do is they would have taken. I'm going to write this off so you can see it up here. They would have taken that $2,000 times 0.01, and that's where they come up with that discount of $20 right there. All righty. On the 15th, it's another purchase, same thing just like the first. So notice it's the exact same accounts. You just change the amounts. You have debit purchases, debit freight in, credit accounts payable. And then on the 17th, it looks like we had another return. It's just like before, you debit AP, credit purchase returns for 200. And then of course, now we're going to pay it. So don't forget to account for the return. So we'll debit accounts payable, credit purchase discount, and credit cash. And don't forget to account for that return to get that purchase discount. And I think that's it on this one. I think down below, they kind of show you the calculation. I think it's right here where they show you, you got to be careful with that return, that $200 return. If it's the original sale or purchase was $1,600, we returned $200. So that times 1%, that's how they came up with that 14 bucks, in case you're wondering. All righty. So that would take care of number 4. On number 5, they're just going to have you do kind of like a flip. What one, the buyer and seller in this case. So Bay's the buyer, Johnson's the seller. And so here's the transactions for the buyer end of it, where you bought merchandise, you returned it, and then you paid it. So you note how the amounts are going to be the same. It's just I want you to see how the accounts are different. So notice for the buyer, you debit purchases, credit AP. And then here's your return where you debited AP, purchase return. And then here's where you paid it. Debit AP, credit purchase discounts, credit cash. So look at how this changes for the seller. Let me flip that over. Notice the amounts. Notice how the amounts are exactly the same. It's just that this is how the seller would have accounted for their transactions. So note you have AR sales, debit AR, credit sales for the sale. Here's how they would have accounted for the return. And then that discount, that's for the seller, it's a sales discount. For the buyer, it's a purchase discount. You can see how that flips for the seller. So the seller would have debited sales discounts, debited cash, and then credited AR. So again, this is a good problem to try to show you the dual side to the effect of the buyer and the seller, and how essentially they mirror each other, but each of them have different transactions. All right, that's number 5. Number 6, we're going to get into the cost of your inventory. So you note that we've got purchases plus freight in. You're going to subtract out your returns and discounts. And notice down here, they're going to show you that calculation. Your net cost is going to be $44,815. All right, that's number 6. All right, number 7, we're going to get into the AP ledger. And you'll note that they give you a control account, just like you have accounts receivable, accounts payable is your control account here. These 3 creditors add up to who we owe. That adds up to the 7,600. Notice we got a couple postings here we got to account for. One's to Sutherland and the other one is to Evans, it looks like. And so down below, let's show you essentially once you post those, you can see how you have a $400 and a $200 debit. Here's your control account. And then when you go to your your AP ledger, you can see individually, let me show you this. So Enterprise, there's that debit individual to that creditor, and then Sutherland gets their debit. These 3 balances should add up to your total control account. All right, that is number 7. Let's check out number 8. Again, same type of problem, same deal, except on this one, I believe they have you do an analysis, but it's the same type of problem. Where you've got the control, you got the AR, the AP, and then the subsidiary ledger. And then here's a schedule of the creditors eventually. And then they want you to answer a question. Of course, I already told you that they should be in balance. All righty, that was 8. 9, I'm just going to show you I'm not going to go through every one of these, but let me just show you. Essentially, they want you to record all these in your journal. Here's your journal. And then they're going to have you post to your ledger. And then they have an analysis question. So you can check these out. These are essentially at this point the same type of problems, transactions you've seen already. Nothing's new here. You just have to kind of keep track of it. So I'm just going to page down slowly. You can see all the entries we've already gone through. So again, just make sure once you recorded these that you post these. Here's your ledger. They want accounts payable, purchases and freight in posted, and then they want you to analyze. All righty. So that was 9. That one will probably take you a little bit longer than the others. There's a lot more to do. And then here's the longest problem here where you got to do all these. And again, I'm just going to kind of slowly page down. At this point, everything's review, all these transactions you've seen at this point. You just have to kind of watch the names and who we're buying from. And as I page down, you can see there's nothing really new here. It's just volume. So just make sure you record all these, and then they have an analysis question, and you can go through that and look at the cash discount on September 12th. All righty, guys, that is your Chapter 10 homework.